Hello traders. So today I want to teach you a very simple strategy on how to enter a trade. A lot of traders will complain that they don't have a strategy and an entry strategy. So I want to teach you like 2 to 3 strategies that you can use if you want to enter a trade. It is a simple smart money concept entry strategy. So you might want to stay tuned to the end of this video because I will take you step by step and I will make sure I make it very simple to understand. So let's move straight to the main point. I think we would have to put our disclaimer message and our intro before we continue. So just hold on while we place our disclaimer message because most of our contents are educational purpose and not financial advice. They are personal strategies we use and we share with you people, and we actually tell you to always try all strategies on your demo account before using it on a live trade. So stay tuned. Immediately after the intro we will dive straight into the main points. So welcome back. So like I promised you, we won't waste too much time on this. It is just a simple smart money concept entry strategy, right? So in this strategy, you will notice that there's what we call the change of character and the break of structure. For those who don't actually know what a change of character is it simply means change in the nature of market movement from either maybe bearish or from bullish to bearish to vice versa. So this happens when the market sentiment change, right? So like let's say a market is forming a lower high and lower low. Let me give you a very simple example. Let's say this market is forming uh, color should be sorry, we need to change the color so you can see it clearly. So let's say this market is forming a lower high, right, and lower low. You see, it's forming lower high and lower low, meaning this market is in a downtrend. You can see it's forming lower high and lower low. It will never go back to the upside. If this market decide to come to this side and break this structure, that is when we call it change of character. If this market decide, instead of coming to this side and turning back, it's come from here and breaks this previous lower high to the upside, then we call it a change of character. It means this market has shifted from a downward trend to a bearish trend. So this is what we call a change of character. You can see that this market is clearly a downtrend if you put your trend line like this. You see, it was only forming a lower high. All these points you see here are our lower high, and we call it the liquidity area where the big boys and the big banks usually come most of the time to enter the market and sell if we are in a downtrend, while if we're in an uptrend they come to the market to buy. You see this area? All these area are referred to the liquidity zone. all this area is what we call the liquidity zone. So this place is mostly where the big boys and the big banks usually come to the market to push the market downward, right? So the big banks also are also around the side. You can see they are also around the side here. All these places are also called the liquidity area. They are also around the side. So these guys decide to break the structure, they change the character from here. This is also part of market manipulation. They will hit, a lot of people might be entering for sell market here. The retail traders like us might be entering for sell market here, but they know that they want to change the market direction because they have the power to change this market direction. So they decided to break, to change the character and to change the movement of the market right to a buy market, to a bullish market. Meanwhile, a lot of us already have our stop losses around this zone. We already have our stop losses around this zone. This market will take us out of the market. That's for those that even put their stop loss. For those that didn't put their stop loss, they will end up blowing their accounts because they might be thinking this market will come back, and this market will never come back and it will continue going upward, and before you know it they will blow there. So that is why it is very important to always put your stop loss if you are trading. That is very, very important. It's part of risk management. So now, what is break of structure? I explained what a change of character is. Break of structure usually forms in the direction of the market trend, which is this, like I told you. All these liquidity points you see is break of structure. It usually forms in the direction of the market trend, creating a continuation pattern. You see, if you put your trend and you notice that this market is forming a continuation pattern, usually breaks the recent highs, right? Break of recent highs, and it will continue going downward, and break of recent lows. It breaks of recent highs, we're talking about break of that is if it is in an uptrend, but break of recent lows if it is in a downtrend, right? These are the lows. These particular ones are the lows. So it breaks it and form a new lower low, another new lower low. So it continue going down, not until we have a a change of character, which is this one I explained. So we have the choke, which is the change of character, the choke, which is a change of character, and the break of structure, which is the BOS. I hope you are getting this right. So now, how do we get a simple strategy that we can use in entering any of these formats, right? How do we get a simple strategy that we can use in entering any of these formats? So if you want to use this break of structure strategy or the change of character strategy, once you notice that the market is forming a lower high in a downtrend, it's forming a lower high, you keep marking your highs, your lower highs. You keep marking your lower highs. You know that this market will definitely not come to this place. Once you notice that this market never comes to this place, that means that you have an option to enter the market, right? So let me mark this one out for you to see. So now, how do you enter this market? Immediately you marked this low. Immediately you mark this low. You waiting for this market to go and touch this your highs. Then you can either take a trade from these your highs to this particular, either maybe here as your first take profit, or you wait for it to go for a retest. Once you mark this zone here, you wait for it to go for a retest, then you look for other confirmation like the engulfing candle, the pullback candles before you take a sell to follow the big guys to the next support level, right? So immediately that happens, you get out of this market right here. Already you mark another zone, right? You mark another zone here, which you wait for a retest again before you take a shot. You mark another zone just right here, you wait for this retest that came here, then you take another shot to the next level. So this is how this particular strategy work. Then if you want to use the change of character strategy, you wait for these markets to break this trend. You know it was a downtrend. You wait for this market to break this trend, then you wait for a retest. This market will definitely come back and retest it. So once you notice that this market has come back for a retest here, you wait, you look for your confirmation candles, your pullback candles, and your engulfing candles. Then you take a buy, a long position, right? You take a long position and will be taking out your profit in your next maybe resistance zone upward, right? So let me show you another strategy. We're going to practice this on the live chat, please. Don't worry. I'm just trying to show you the practical side of it so that you will understand the concept easily. We're going to practice it on a live chat so that you will see. So there is something we call this pattern. If you notice, let me delete this once. There's something we call, if you notice, in the market, usually there's something that usually forms like this. I don't know if you do observe. Sometimes you see the market might be coming in a downtrend, and before you know it, this market will do a break, a change of character like this. This market will do a change of character like this and break up to an uptrend. You get. So what will you do in this situation is for you to mark out in a buy. Since you want to enter for a buy, you mark out the last bullish candle that formed. You mark out the last bullish candle that formed. So the last bullish candle should be around this side. The last bullish candle might be around this side. And what will you do? You'll be waiting for this market to come back to this your zone and retest. Then you take a buy market to follow the trend. You take a buy market to follow the trend. This strategy works like 90% of the time. This strategy works like 90% of the time. So similarly, in a downtrend, if you want to take a sell market, you notice the market will be forming lower highs and lower low, right? Just like we did initially. The market will be forming a lower high and lower low, lower high and lower low, lower high and lower low. Then you notice this change of character, which forms like a W pattern. You see, it forms like a double button, right? You notice this change of character, which forms like a W. Sorry, I'm supposed to do for the sell market. Sorry, I'm supposed to do for the sell market. So that will be in an uptrend, forming higher highs and higher lows, right? It will be forming higher highs and higher lows. Let's do that right away. It will be forming higher highs and higher low. form higher high than the previous one, right? Then higher low, higher high, then higher low. Then instead of it to form a higher low, we notice a break, a change of character like this. We notice a change of character like this. You see, instead of it to continue forming that higher high, we notice a change of character just like this. So what do we do in this situation is for us to mark out the most recent bearish candle, the last bearish candle that formed when this change of character happened. So you look for the last bearish candle that formed when this change of character. Usually you see it around this side. You see it around this side, almost like the double top and double bottom around the neckline side. So what will you do is for you to wait for a retest in your zone, then before it collapse to the downside, right? Before it collapse to the downside. So you follow this market to the downside, meaning you'll be entering for a short position just around the side. And your stop loss, always give your stop loss a breaking space. You kind of leave it a bit, give it a breaking space, leave it a bit higher than your zone. Then your take profit should be the next support level, the next support level, the next available support level. This can be your take profit one, and this can be your take profit two. This zone can be your one, and this zone can be your take profit two. Let me show you. This one can be your take profit one. Here can be your take profit one, right? And this one can be your take profit two. This one can be your take profit too. So this strategy works out in most of the time. Works out in most of the time. So now I told you that I will be showing you like 3 to 4 strategy. The last one I will show you will be, okay, let me don't waste too much time. Let's go to the live chat. So, towards the end of this video, I will show you the last strategy, which is like almost 99% accurate. That one is even less kind of stressful. So let's go to the main chart and let's see how this strategy works. Let's delete on the drawings. This is Euro USD. This strategy can work on any currency pair. This strategy can work on any currency pair, any financial instrument, the crypto, stock market, anyone, name it, and any currency pair. This strategy works, and it works. I'll advise you do it on maybe your 1 hour time frame, 30-minute time frame, and your entry level should be around your 15-minute time frame. Because if you pick out your zones, you mark out your zones in a bit higher time frame, then you can do your entry level around the 15-minute time frame, or probably even the 5-minute time frame. So if you are a swing trader, you can just mark out your zone on your weekly time frame or monthly time frame to daily time frame down to 4 hours time frame, and you take your entry point around your 1 hour or 2 hour time frame. So now, let's see how this strategy work practically, right? So like this now, we can see uptrend around this side, forming higher highs and higher lows, right? So, but now we notice a change of character around the side, and if you check, you will see a kind of the like the double top pattern and the M pattern. You understand? Even though it doesn't really give the double top um, shape very well, or you notice something like this around the side. So now in this scenario, how do we get into this trade? Please note that once you come into the market, I want to just listen attentively, please. Once you come into the market, this market has been in an uptrend, and here is a 1 hour time frame, right? This market has been in an uptrend. Okay, it has been in an uptrend. We can actually cut this out if we don't want to. You can actually cut this one out like this. This is a current market. This is a current market. Actually cut this out. Okay, so now instead of this to continue forming higher highs just the way it was forming, you can see a break of change of character here. It broke these higher highs and came down, right? It broke this higher high and came down. So we are anticipating that okay, there's possibility that this market might continue going down, or we can actually quickly take out some profit out of the market, right? So now in this situation, what we do in this kind of situation is for us to mark the last bearish candle we notice. Let's play this a bit and see how it is. It's for us to mark at the last bearish candle. You get, you mark out the last bearish candle. Where is the last bearish candle here? This is the last bearish candle that formed, right? You mark it out and wait for a retest. If this market didn't retest, please, you don't have to take the trade. You look for another setup. If it didn't retrace to that your zone, you don't have to enter this market. Please, you look for another setup. You look for another setup. So now we have this market retraced. You see, this market retraced, and if not because of we are in the replay, I would have entered this market just right here, and our stop loss we said will be just above here, and our take profit will be our next support level, right? Let's shift our take profits to this next support level. Our take profit will be just around the side. Our take profit will be just around the side. So if this market decided that okay, it wants to go against us and hit our stop loss, we shouldn't mind. That is why we have our stop loss. But if this market play out the way we anticipated, then it is a win-win situation. But mind you, if we already entered this market, we must have maybe shift our stop loss a bit. So, but let's see how this market will play out. Okay, this is a live market. The market stopped here. Yes, the market stopped here. So, and today we just entered Monday today. So that means if you want to take this trade, you can take this trade. This is an opportunity. If you see this video, if I'm able to post this video early, or if I post, okay, I'll be posting this particular video on Friday. So, but kindly go back and check how the market play out, please. So I'm expecting this market to come to this zone, going by our strategy. I'm expecting this market to come right to this zone, going by our strategy. Right? This will play. I want to stop the replay. Okay, so now I'm expecting this market to come just right here. So let's look for other opportunities, other opportunities, and see how we can take advantage of it. Let's see if we can see other opportunity, and let me go far away. Okay, I see we have a kind of uptrend here. I see we have a little uptrend here, right? Then we have a change of character around this side. Before it was forming higher highs and higher lows. All these are our higher highs and higher lows. All these are our higher highs. It was forming higher highs, higher lows. See here, higher highs, higher lows. So all of a sudden, these markets decide it wants to break, change the character, broke it and came down, right? So what do we do in this situation? We said in a bearish market, we should be marking the last bearish candle and waiting for a retest on the last bearish candle, right? So now, where is our last bearish candle here? The last bearish candle is this candle, sorry, this particular candle is the last bearish candle, right? And we said we'll wait for a retest before we take it short. And if you notice, there was a retest. This particular candle came to retest the market. Even if you mark this as your last bearish candle, it will still work out well. This particular candle came in as a retest, and we immediately saw this pullback candle. You see this long pullback candle, and we immediately enter for a short just around this zone. And we said our stop loss will be just above here, and our take profits will be in our next maybe support level. So this is our next, actually this is our first support, second support, so you can just put it here. And if you look at this market, it plays out nicely for us. It plays out nicely. So let's look for another opportunity, a very nice opportunity. Please make sure the market is clear before you take a trade. I will advise you to always make sure that this market is clearly forming the higher highs and higher lows in an uptrend, while in a downtrend it's clearly forming a lower high and lower low before you take it. And make sure you see the the W shape form, in that shape form, before you decide to enter stock market. Don't just jump into the market, please. You don't have to jump into the market. And like I told you, this work on any currency pair. It works on any currency pair, right? So now let's look for another opportunity. This one, and you want to, I will advise you to always avoid a ranging market. When you see that the market is ranging, try to always avoid a ranging market. This is already forming higher highs, higher highs, higher highs. Let's look for the one that formed. Okay, we have a small bearish. I want a clear trend, please. Always use a clear trend. And don't forget to always, when you mark your zone, please always go to a lower time frame for your entry. Always go to like 15 minutes. If you mark your zone in a 1 hour, always go to like 15 minutes for entry, right? Always go to like 15 minutes for your entry. So now you see, okay, this is forming higher highs. Okay, you can see that there is a break of structure here. There's a break of structure around here. There's a break of structure here. Yes, there's a break of structure. This is just a small one. I always like to avoid it, but if you want to take such trade, you can see it. You can see that there is a kind of double top somehow like around the side. You can see somehow around the side, right? So, and we said we want to use our last bearish candle if we are entering for a sell market. If you notice, there was a retest. It came to this zone and retested it before the market dropped down. So if you enter this market, you will definitely get your profit. With your stop loss, I say just above here, and our take profit will be just in the next key level, support level, right? Or key level. So let's look for one more opportunity. Let's look for one more opportunity, then I will show you the other strategy I said. I think this is as a result of news. You might want to avoid the news period. You might want to avoid the news period as it might just go against you. So with always trade in the normal market, please. You might want to avoid the news period. Okay, here I see like a double bottom around the side also. I see like a double bottom around the side. I see it. I see like a double bottom. And this is the last bearish candle that formed. This is the last bearish candle that formed here. After bullish candle, sorry, you need to see. So you can just mark the zone. If you notice, there was a retest around the zone. We won't take it to this side since we don't know what happened around that side, right? So if you notice, there was a retest around this bearish candle. So if we enter for a buy market, a long position after the retest, put your stop loss, just give it a breathing space just above here. Sorry. And our take profit we said should be in our next key level. So if you look at this, you will notice that this market play out well. This market play out well. So you can go on and on and on with this strategy, and at least you will get more than 90% win rates. At least that's the least you get. More than 90% win rates. So like I promised you, towards the end of the video, I will give you another strategy to make it like three entry strategy we'll be having for today. So the last strategy is using your fib retracement tool to get your entry points and also your even exit point. So let's say you're having a break of structure, which we already explained at the beginning of this video. You keep having different break of structure in a trending market. and let's say you now have a change of character. So once you are having a break of structure, what you will do is to pull out your fib retracement tool, just like this. You pull out your fib retracement tool and place it from where your lowest low, right? So you place it up to the most recent. Let's assume that we don't know what happened in the market. Let's assume we don't know what's happening. We can even actually cut this so that we understand this very well. Let's assume you don't even know what happened in the market. So immediately you pull out your fib retracement tool. Let's mark out. We can mark here out. Let's mark this one out. So immediately you pull out your fib retracement tool. Then how do you do in this situation? How do you do in this situation? Is for you to mark out your golden zone or your premium zone. Where do we call the golden zone? We call around the 0.618 and 0.786, the golden zone. So let's mark it out. Immediately you mark it out, it's either you remove your retracement tool if you feel like, or you leave it if you think it won't confuse you. So if you want to remove it, you click on it. In as far you have marked your zone, let's cut this one out, right? Let's cut this one out, as assuming we don't know what will happen in the market. So after we mark the zone, let me cut here again. Let me cut here again. Sorry. I need to cut here again, right? So after we mark the zone, this is our zone, right? We already pull out our fib and mark out this our 0.618 zone and 0.7 zone, right? So we'll be waiting for this market to retrace back to this our zone. We're waiting for this market to retrace back to this our zone. Remember, this is a buy setup, right? This is a buy setup. So we're waiting for this market to retrace back to this our zone. Immediately we notice that this market retraced to our zone, and we see some confirmation that okay, this candle has a kind of rejection candle, pullback candles, engulfing candle. So we'll be entering for a buy. Remember that you have to step down to a lower time frame. This is 1 hour time frame. You have to step back to a lower time frame to see your entry better. To see your entry better, I've stepped down to a lower time frame. You can see. So now I'm patiently waiting for this market to come to this zone. Don't not to forget, it is your wish. If you feel like you can leave your fib retracement, like personally I do leave my fib retracement tool, but if you don't feel like, some people say they normally get confused. So this is right in our zone. You can see this market came to our zone, but because sometimes they know that a lot of people might have already entered this market and put their stop loss just right here. Look at what happened here. But we didn't enter the market just immediately, right? We will be entering this market immediately. We see this big engulfing candle. That's when we'll be entering the market. That is part of our um, confirmation strategy. So we saw this big engulfing candle and we saw this pullback candle, this next green candle. So these are our confirmation candle. So even if the market goes against us, we won't worry because it is our strategy and our stop loss will take care of that. So we say we'll be entering this market just after this engulfing candle. So remember your stop loss will have to be just a bit below here. That will be where your stop loss will be. Your stop loss must be around this zone. That is the rule because you entered here, right? Because you entered here. So your stop loss must be around this side. And your take profit should be your next key level or this other side. You can split your take profit, either take profit one and you now move your stop loss to a break even, then your take profit two might be around the side. So let's see how this market plays out. You see, this market went exactly to our favor and even beyond. You see, this market went exactly to our favor and even beyond our expectation. So you see, so if we want to look for, let's look for another strategy, another entry point to see how the strategy work. Let's move backward. Let me delete all the drawings. Let's move backward to look for an entry target. Right? One thing with the market is that you need to be very patient. This sometimes is as a result of news. If you cut this now, you see that this is as a result of news. So we won't be taking that. These usually work in a normal trading market, either up or downtrend. This strategy usually works in a normal trading market, either upward or downtrend. So you see our M pattern here, the one we did, the other pattern we did, where we said if we see a shape like this, we'll mark out the last green candle. We'll mark out the last bearish candle, right? And wait for a retest. When you mark it, if you mark this zone, you will see that there is a retest here. Let's take this one a bit up. You see that there was a retest here, and if we enter this market, you see how the profits will be huge. You see, assuming we enter this short position right here, you see that this market, so you can enter this market right either here or here. If you place your stop loss, we said should be just above your zone where you marked out, and your take profit will be in your next key level, just right here, right? Or even above there. Once you check your previous key levels, you can use it to mark your take profits, right? So in this Fib strategy, what you'll be doing is that if you check that the major trend is a sell market, that's a downtrend, we would be concentrating on a sell, right? If the major trend is a uptrend, we will be concentrating on a buy. So you would check the higher time frame to see what the major trend is at that moment,
So then you mark out your zone with your fib retracement tool. After marking out your zone, your golden zone, we'll wait for a retest to that golden zone before we take a shot, right? So like this now, you can see my screen. Currently the market is on a downtrend on 1 hour time frame. Then you pull out your fib and place it right from the top of the wick here. You place it on the top of the wick down to this side, right? Down to this side. If this market didn't come to your zone, then you want to just ignore it. You get? You want to just ignore it. You mark out. Oh, sorry, this went out. Let me put it back. We said we'll put it from this place down to this side, right? Then we'll be waiting for it to come to our zone before we take a shot, like I said. But if this market did not come to our zone, we're not going to take that market, except if we have a change of character. That means the trend has changed. But we'll be following just this strategy. And we said our golden zone is around the 0.618 and 0.786, right? So let's mark out our zone. Let's mark out our zone. Let's see. Let's mark out our zone. As we said, let's mark out our zone. Some traders usually include the 0.51 zone, but I prefer using this one because it gives me more assurance that okay, this market really would, it will give me more assurance that this market to make my strategy more stronger, my confirmation, my entry confirmation more stronger. So let me remove the fib after drawing my zone. So I am waiting for this market to come to my zone and retest it before I take a shot, right? Let me extend this. So you can see that this market actually came to my zone here. It came and retest. It touched. You can, if you notice that this week actually came and touched my zone, right? So in this situation, I'll be entering for a short just after I see this pullback candle. Let me zoom out my screen. Let me zoom out my screen. I hope you can see. You can see these pullback candles, right? You can see this pullback candle giving me a confirmation that okay, I should be entering for a sell position right here. And if I'm entering for a short position just here, that means my, after this confirming this candle, right, that means my stop loss will be right above here like we said, and our take profit will be next key level, our next key level, right? Our next key level, like we said, will be our take profit. Let me extend this. So this is it. Let's see how this market will play out. You can see how the market is around this side. Okay, this market, I think this is a live market. Sorry, this is a live market. So like I told you, we'll wait and see how this market will play out. Today's date is, currently we are on Tuesday, 9th of April. So we'll see how this market will play out. In case you are watching this video, maybe probably I might be uploading this video on Friday, you can go back and check the market and see how it will play out. Let's move back and look for a market that is not a current market. Let's move back and look for okay. We can see that there are a series of uptrends here. There are series of uptrend here. Sorry, I'm having issue with my. You can see that there are a series of uptrend here. So this will give us confirmation that okay, we need to look for. Let's say we come into this market around. Let's say we come into this market around the side. Let me cut. Let me do a replay. Bring this one down and let's do a replay. Let's assume that we came into this market when we see this. Let's do a replay around. This, what is the problem with this? This is giving me some kind of issue. I don't know. I'm having challenge. We need to cut any part of the market. Let's see, we came into the market here. Let's say we came into the market here and we don't know what's happening, right? But we can see that clearly this market has started forming a uptrend, right? So we'll wait for a clear uptrend market. So like this now, let's assume okay, we saw this that this market is forming uptrend and we pull out our fib. Let's assume we pull out our fib just right here. Sorry. I'm doing this on I'm doing this video on a small tab, that's why I'm having issue. I'm doing this video on a small tab, that's why I'm having issue. So let's say we have a run here. This is giving me serious issue. Okay. Shift please. Good. Okay. Let's say we mark out this zone. Let's say we mark out this zone and we waited for a retest. Or let me just take it to the recent one. Let me just take it to the recent one. So let's assume we came into this market just right here, right? So what do we say we do? We'll mark out our golden zone. Let's mark out our golden zone. Our golden zone we said is, oh, let me shift this. This is our golden zone. This is our golden zone. So in this situation, we will be waiting for this market to retest into our golden zone, then we'll take a buy. Why? Because currently we observe that this market is an uptrend. Let me remove the fib. So let me delete the fib so you can see it clearly, right? So like I told you, you have to move to a lower time frame. You will move to a lower time frame so you can see your entry clearly, right? So and now we are waiting patiently. We'll wait patiently for this trend to this market to come into our where we marked our zone, and we see some pullback candles. You see currently the market came into our zone and we're waiting for opportunity for it to get out of our zone before we take a buy. And we see that we're waiting for it to get into our zone, to get out of our zone before we take a buy, right? We won't take any market until the candle started forming out of our zone. That's when we'll take a buy, and we see some kind of engulfing candle. This, you can see this market currently, it is out of our zone, right? It came into our zone and perambulated, did so many things. We won't enter that trade if it is in our zone, except we notice that this market is out of our zone and we've seen some kind of pullback candles, engulfing candles, and rejection candles. That's when we'll take a buy. So let's just patiently wait and get some confirmation. Okay, we have some confirmation here. It came back inside our zone again, and we can see series of green candles, like momentum candles forming and going up. We notice a pullback candle, right? This right here, we notice this pullback candle and this very momentum candles that form. This give us high confirmation that okay, this market um wanna go up. You see this, what happened here is our confirmation. So in this situation, I will be entering for a long position personally. I will be entering for a long. I'm trying to make this video short somehow, because to make it quickly, but though, even though I noticed that it took some time, I'm having a kind of little challenge with this particular system and I'm using. So we'll be taking a long position, we said, after this confirmation, right? After this after this pullback candle. So that means we'll be entering right here, and our stop loss will definitely, since this market plays a lot with our emotion around this side, we can be conservative with our stop loss. It should be in this low, last low, this particular recent low. It should be there, not like I said in the other ones, because the market, those other ones, the market was straightforward. Why so? But in this situation, because it plays a lot in our zone, the market played a lot in our zone, so we just want to be really conservative and put our stop loss just below the most recent low, and our take profit, we said, should be two times our take our stop loss or our next key level. Our next key level. I'm finding this system is giving me somehow. I need to remove the bottle so that you can see up here. Good. So it should be on our next key level. So look, you have to move back and see where. Let me zoom this in. Let me zoom this in. You look for your next key level. You look for your next key level at the back. You will have to zoom out and look for, you mark out your next key level. Actually, network is giving me headache. Let me see photo. Let's look for our next key level. We need to see how this market will play out. So let's go to a higher time frame. Let's go to the 1 hour. Let's go to the 1 hour so that we can easily mark our next key level. So this is our next key level. You can see it right here. Let me mark it out. This right here is our next key level. This is, hope you can see it. This right here is our next key level. The next visible key level I can see is this. So if you want to be a conservative trader, you can just put your take profit as an double your stop loss as your take profit. But if you can stay longer in the market, you can put your take profit as your next key level. You get, you can see though there are some reactions here. You can see there are some key levels around the side too. You can see there are some key levels. If you don't want to stay too long in the market, you can take the recent one, the most recent key level. You can see there are some reactions around the side. So let's use this recent key level. I think is fine. If you even go to a lower time frame, you will see more key level again that you can use. Let me see. If you check very well, you see there are some reactions also around the side. There are some reactions around the side. So if this market gets to this, you can use this as your first. Though if you checked, you will see that it's also reacted here before previously. So this can be our first TP, and the other key level will be our second TP. Let me go back to the 15-minute time frame. Let's play this market and see how it works. Let's not delay too much. So you can see this market played out right well. It went straight to that our long distance key level and smash our take profits. You can see, even if you want to set the first TP1 as this and the TP2 as this key level, and even up to even above our expectation. You can see even above our expectation. So this is how this strategy work. If you go to you look for a trending market. If the market is in the trending market, maybe a buy market, then you will be doing a buy setup with your fib retracement, marking out your zone, allowing it to come to your zone, test your zone, then immediately you see your engulfing candles, series of momentum candles, a pullback candle as rejection candle out after you entered your zone, and it's get out of your zone. Please take note, it get out of your zone and you started seeing those and those candles rejections. That is when you will take a buy. So if it is in a sell setup, let me delete this. If it is in a sell setup, let me end the replay and look for a sell setup. So in a sell setup, you will make sure the market is in a sell position, or the trend wants to change, where we get the change of character like I told you before, right? So we have a sell setup here. You pull out your fib retracement tool and place it right from this top. The first place you notice the sell market change, right? Or any swing high, any sell swing high you notice, right? Then after marking it down to the swing low, you will mark out our zone as we said, which is the 0.618 and 0.785. 86 zone. You mark it out and put it just the way we said, right? Let's mark it out. So I hope you can see it, right? You can see it. So after marking out your zone, you want to remove your fib. Let's extend the zone. Let's extend it very well. So after marking it out like this, you see I'm extending it right away. So after marking it out, you can remove your fib if you feel like. If you don't feel like, you can just leave it. The fib will guide you in your take profit if you feel like. If you leave the fib just like this, let's extend the fib. For example, if you leave, I hope you can see our zone we marked out. If you leave the fib, you might be using the fib levels as your take profits if you want, or you mark out your next key zone as your take profit. Let's extend this a bit backward. So if we want to say we'll mark out this zone, let me mark this zone out. Let me mark this zone out, this particular zone out. Don't forget, we will be waiting for a retest back in this zone, right? We'll be waiting for a retest back into. Let me shift this a bit down. Let me shift this a bit down. So if you feel like you can remove your fib, let's delete the fib. So now we'll be waiting for a retest to this particular zone. Where is our writing tool? Right, we'll be waiting for a retest to this particular zone. Either when it touches it or play around it, sometimes it can even go like this out of it and come out and come back from there to this our next take profit level. To this our take profit level, right? So, or it can just go to this the mouth of our level, touches it, and immediately touch it can just go to the mouth of our level. Let me do it again for you to see. Let's assume it can go to the mouth of this place, touch it. As soon as we see our confluences of entering the market, like I told you, then we'll enter the market immediately, and our TP will be just here. This is our TP will be. Why is this still giving me headache like this? Okay, our TP will be just here. I hope you're getting what I'm trying to explain. So now let's remove all this writing and look for our wait for our entry position. Remember, we are in the 1 hour time frame. Like I told you, you can always step down to a lower time frame. Let's go back to 15 minutes after, since we have already marked our zones, right? Let's go back to the 15-minute time frame and wait for this to pull back to our zone, our 0.618 zone or 0.78 zone, right? So let's play this market and see how this market will work out. Let's play this market and see how this market will work out. We are patiently waiting for it to pull back to our zone. If this market didn't pull back to our zone, then we'll look for another opportunity again. That is how the strategy works. We'll look for another opportunity again. Remember, this zone we mark is just where we'll take our profit, please. This zone, don't mind that this market passed there. I just mark it out just to show you where to take out your profit. So forget about it's coming to this down zone. Okay, now we have it on our zone right now. You see, it went straight into our zone, and we see these momentum candles. This shows us that we'll be entering for a sell market just right here. We'll be entering for a sell market after we see these momentum candles. For a sell market here, our stop loss will be above this level, our entry level. Above this level we marked, and our take profit, we say, because of what we discussed, we said our take profit will be right here. This is our next key level, the one we marked previously, right? So our take profit will be just right here on our next key level, or even above. If you want to include this, you can also mark here as another place of take profit. Let me see, where is my, you can also mark here also as another zone, as another key zone for take profit, right? So let's play this market and see how this market will end up. I just hope you are understanding what I'm saying. If you, in case you have any question that you want to ask, you can drop it in a comment section and I will be checking them. So let's see how this market will play out. You see, this market went straight to our take profit. This market went straight to our take profit and hit our take profit. As a conservative trader, I will just go by the first TP, you understand, and move, except if you want to target the next TP, which is another next key zone, you will move your stop loss to a break even, or you move it just maybe around the side in case the market wants to, go back, and it will take you out in profit. Why? Because you want to target higher profits, right? So let's see if this market might come to this next key level, meaning our take profit to, we made our take profit too. But if it didn't come to that, if you are a conservative trader, immediately it hits your first key zone, you're out of the market. That is how I do my own. But there are some aggressive traders that wants to take huge money. They can decide to wait to take their profit in the next key. Yes, there's profit too. You see, it get to our profit too. I hope you see it yourself. This got to our next profit too, meaning it got to this level. I hope you can see it clearly. So this is how this strategy work. If you want to learn more about the engulfing candlestick and more on candlestick patterns, you can watch this video showing right up on your screen, or you scroll through our videos. You will see where we discuss in detail on how to identify our candlesticks, and how to know when a candlestick wants to change direction, where a candlestick will, the length of a candlestick, how the length of a candlestick will determine where the market will go. You can just check out this video I'll tag here, or scroll to our page. You see we did like almost 3 videos on candle, especially on price action and candlestick, and you can watch that. So thank you for watching this video. Please, if you are yet to subscribe to this YouTube channel, kindly hit the subscribe button, share this video so that others will benefit, and also hit the like button for this video to go more viral so that others will benefit. Thank you, and see you in our next video. Peace out.